Welcome back. You're watching The Money Show. Let me introduce Dhirendra Kumar of Value Research. He's joining us right now on the show. Dhirendra, thank you for joining in. I suppose this is a time when a lot of mutual fund investors will be asking that, look, markets are falling. What does it mean for my mutual funds? Now, Dhirendra, you've seen it all. You've seen a big crash come in 2008. You've seen a crash in the Indian markets in 2013. The 2020 coronavirus crash as well. But through it all, how have mutual funds essentially sailed through it? Yes, there have been those dips in NAVs, but let's say if I was an SIP investor for the last 10 years, because ideally you should be an SIP investor for the long term, how has my portfolio stayed resilient?
Most mutual fund investors turn out to be a beneficiary of such a thing if they are on any kind of investment plan, if they are a SIP investor. But all those people who panic, and this is actually the biggest risk of lot of disappointed investors. All those people who came in recent times meaning 1 or 2 years, they came with huge expectations. They are greatly disappointed, and they take their losses. If their investment has gone down in value, they redeem their investment and walk away. All their losses become permanent. So this is primarily a mismatch of their understanding. Most people, investing is a very optimistic endeavor, that you invest to grow your money, and then you see a big depletion and you're scared and you're driven out of the market. That is why getting started in a manner which is not very hostile is crucial. So I think mutual fund is not all equity fund. Mutual fund is not only small cap fund which investors experienced 2 years ago. They are of all kind, and I think many investors will be comfortable, but many investors will be extremely disappointed with what has happened in the span of 4 or 5 days. The decline is of a last 1 month return, or most mutual funds have fallen in the range of 20 to 25%, and all equity fund of different kind. So that is disappointing, and this is time for most investors to really revisit what they are comfortable with, what they are extremely uncomfortable with, change some track, but definitely not bail out, not pull out their investment. And if brave investors, if they are left with some money, maybe invest their money, but not a knee-jerk reaction that if you have any money, invest tomorrow. This opportunity is not going away in a hurry. This is a very unusual opportunity from a market context, because all other crises in the past where it had its origin in the market, or in the financial market, or in the corporate world. This is something which has come from the main street into the markets, and the jury is still out. This is still underway. We don't know how it will play out, and the kind of implications are clearly visible. There will be some long-term implication, there will be short-term implication, and there will be some immediate term. Many industries are going to be impacted immediately. Next quarter results will be very disheartening. This will lead to bankruptcy. So it has real consequences. It is of a different kind, and all the solutions, financial solutions, will not work, because this is causing a big behavioral change in the world, in the communities.
Okay, that's a very interesting take actually, Dhirendra. He believes that this low market value phenomenon may not go away for a very long time. But Dhirendra, again, if I'm an SIP investor, should I use this opportunity to perhaps slowly increase my SIP amount? Because like you're saying, maybe over the next 2 months we may still see low market values, quarterly results may be impacted. That as well may cause markets to go a bit lower. But still, shouldn't I, from maybe next month onwards, increase my SIP then?
If you have the money, if in fact the way to approach SIP is that the money which you are unlikely to need for the next 5 years, you should be investing gradually, even if you have lump sum money. So by all means do that. This presents a great opportunity, but it will require a great deal of discipline, grit. So to say, because when you invest, so that is why it is extremely important that you don't invest lump sum at any point. This opportunity is not going away. I don't know how long will it last, whether it lasts for 3 months, whether it lasts for 9 months, 1 year. I don't know, because the crisis is still underway. We don't know the full implication. I don't know how stringent or how widespread it will be, whether it will revive, where it works, how governments are going to deal with it, how intensely some governments are going to deal with it. The long-term impact we don't know. It can actually cause some behavioral changes which can lead to some opportunity for some great industry or sectors emerging, and some sectors disappearing or losing their charm. So in that sense, the jury is still out. It's still playing out. We don't know. So, but definitely, great companies make a comeback. Economic growth, all the variables, the India story, all those things will actually happen at a different pace, in a different direction. And that is why it is important to keep your principles in place. Diversify, invest regularly, don't get greedy, yet don't run away from the market.
Stay put. If you have the money to put away for 5 years, then maybe consider increasing your SIP. I want to also take this opportunity to get some viewer queries answered. Dhirendra, we've got a lot of them coming in. Let's just say you have quite a fan base here. So let's very quickly take on board our first email query. Ron Coutinho has written into us saying, I had planned to churn and consolidate my mutual fund portfolio in the first week of March. But now that the market is down, does it make sense to exit on the premise that I will be exiting and entering again at lower prices to the target schemes that I have identified? Please advise. Dhirendra, is now a good time to, sort of what we say, do your annual review of your portfolio, see which are the funds that may not be working for you or are not in line with your objective? Is now a good time, or perhaps you should postpone your review plan?
Yes. No, don't postpone your review plan. If you think you have built a solid alternative plan, clean your portfolio and move to something which looks promising, just revisit it again and execute it. Whatever has happened, and you'll be moving, in fact it might be a good time from a taxation point of view, because you won't be liable for a larger capital gains tax bill. The kind of depletion 20-25% we have seen, that is one. The other is that make sure that you are not going to pay any steep exit load. Just be conscious of these two things and execute your plan. You can do it now.
Okay, all right. Mr. V. Rao R has written into us saying that I've been investing 1.5 lakh rupees per month in mutual funds via SIP since 2011. As on 31st March, investment was 62.5 lakh, appreciated to 80 lakhs until a week ago. And after the recent fall, corpus fell to 63 lakh rupees. So that's quite a fall seen over there. Since I see no signs of market recovery, should I redeem my funds as on 31st March 2019? While continuing with SIPs and reinvest when things revive? Also, by the way, he has 11 mutual funds. So, Dhirendra, his first question and second question is, should he reduce the number of mutual funds he has? He has 11 of them. Your advice?
Yes. One is that don't do the first thing. Don't even attempt that, because markets will make a comeback when you least expect it, as exactly the way they have fallen when you never expected it to fall. So these kind of surprises, very difficult to anticipate. Don't try to time it. Yes, clean your portfolio. If I have to choose 4 of the 11 funds, I will be choosing 3-4 multi-cap fund and a value fund, and that will be it. Having 11 fund is definitely a drag on your portfolio, and that is why you see it is a very high maintenance portfolio. It's going all over. It has balanced funds, small cap, mid cap, multi caps, as well as value funds. So, just choose 3 multi caps and 1 value fund, maybe in equal proportion. That's about it. Clean it up and don't try to time the market. Your decline in value from 80 lakhs to 63 lakh is very much in line with what has happened to the market, which is in a region of 20 to 21%. Markets will also make a comeback. This times of panic is not a time to act very intensely or get emotional about it. You understand the benefit of gradual equity investments, as you have done it over the last 10 years with your small investments, and now you have really scaled up to 1.5 lakh rupees SIP. Invest with confidence for the money which you are unlikely to need for 5 years and more, and keep calm and carry on.
Okay. Well, we have Sanket from Thane who's joining us.
It's very difficult to do it.
We have Sanket from Thane joining us on the phone line. Hi Sanket, good evening. What's your question?
Yeah, good evening. Actually, I just wanted to ask that what should be the ideal investment strategy in the current time, and please suggest me some good funds, where should I invest?
Okay, all right. Simple question, Dhirendra.
Most important thing is to really figure out the kind of money that you're investing, how many years you're unlikely to need. Don't invest at one go. Even if you have lump sum money, spread it over the next 2-3 months on a weekly basis, maybe average it, because these are crazy times in the market. It starts differently and ends differently, completely differently in opposite direction. It's a very confusing time. So I would say that for your long-term money, choose 1 or 2 multi-cap fund, do your SIP, and don't look at market every day very closely.
That's very important. Don't look at markets very closely every day. You're investing for the long term, so everyday moves really shouldn't matter. Dhirendra, I wish we could have quizzed you a little more, but we leave it at that. Thanks so much for joining us on this special episode of The Money Show, where we've been
some other
decoding
time. Thank you.
the big market fall. Well, by the way, folks, look at the news appearing on the bottom of your screens. We have yet another investor after ICICI Bank. It's now Axis Bank. The investment amount that they will be pumping in is roughly about 600 crore rupees in Yes Bank. So SBI is in, ICICI Bank is in, Axis Bank is as well in. Reports were also a buzz of Kotak and HDFC, but we'll wait for that as well to break in just a bit. We'll keep you updated on that note. But we will take a very short break. Don't go anywhere. We are going to tell you what are the big bulls, what are the big market voices doing when it comes to this big fall in the market. Are they buying in? Are they advising that you stay? And if they are buying in, what are they buying? Stay tuned.